Look at how the major markets in this region closed yesterday. Let's review the Eurobond issue by Nigeria as Nigeria rounds up its roadshow for a $1 billion Eurobond. I'm now joined by Isaac Babatunde, Executive Director, Corporate and Municipal Ratings at Agusto & Co. to discuss Nigeria's foreign currency credit rating. Thank you so much for joining us. So this, of course, this discussion is very apt at this time. I can see that Agusto & Co. has rated Nigeria BB-, but now investors have to consider the risk of buying Nigeria's debt right now. BB, I beg your pardon, not BB-. So your thoughts on, first of all, how you see that Eurobond issue developing right now. You think that Nigeria is a BB risk. I don't know why I keep saying BB-. But how do you assess that risk right now?
Okay. Before arriving at the BB- rating for Nigeria, we looked at the output growth, GDP of Nigeria, which is in the region of about 6.something%. We look at the external reserves, which at the moment can cover about 13 months of export, about $48 billion.
Right.
There is a stable interest rate. In the MPR has been stable for 12% for some time, and also the inflation rate, which is actually dropping gradually as a result of some of the measures that have been put in place by the government. And we also factor into it the government finances. We look at the level of borrowing and also compare it to the GDP, which relatively is still okay. But when you look at the components, it's more of a domestic debt rather than the foreign debt. And also we looked at the exchange rate, which has been stable over the past, relatively stable over the past 4 years. And then to counter some of these positive things are in the area of unemployment rate, which is growing, and also security and the like. Okay,
but let's move on to some of the, if you like, the negatives that you have highlighted, some concerns. One, of course, is the growing debt to GDP ratio, now at 19%. You've also highlighted the fiscal framework of Nigeria being weakened slightly by the spending of our oil savings. Of course, that's the excess crude account. That has been managed to some extent going forward with the creation of the Sovereign Wealth Fund. But for investors that are looking to buy Nigeria's risk right now, what else do you think is a concern?
Security is a concern at the moment, especially in the northeast part of Nigeria, whereas the one from the south side is being curtailed to an extent. But security, with respect to what is happening in the south, in the northeast part of Nigeria, is a constraint, and is preventing so much economic activity from going on. Because with insecurity, not many people will be able to carry on their normal business, and it's a major concern at the moment. And even when we look at the issue of power sector reform that is being carried out, we realize that for maybe for some days you have some regular power supply, and after some days we hear that there's vandalization of maybe gas pipeline and the like. And at the moment, we land about 1,200 megawatts has been lost in recent times, and efforts have been put in place So in the area of infrastructure, especially power, is very key. It's a major constraint.
If we can move on back to the exchange rate, because I think that is what a lot of investors will be very concerned about, buying, of course, dollar-denominated debt from Nigeria. So what's your outlook for the exchange rate?
Well, for the exchange rate, there is the possibility of the exchange rate dropping, against the Naira, as a result of some more activities in the oil industry, where some of the oil majors are trying to shut down some of the operations or maybe disinvest as a result of the affair concerning the public, the petroleum industry bill, which is being proposed. So with respect to reduction in oil prices and possibly output, there is a likelihood that the exchange rate may move against the Naira. Slightly.
What about the debt stock? A lot of people still say at 19% of GDP, it's still a comfortable level. But of course, the trend is what I think give some people some concern. We've seen that continue to rise over the last couple of years. And now we're hearing that the government is focusing more on buying dollar-denominated debt and reducing its borrowing in naira because of the cost of borrowing right now. Okay. Your thoughts about that strategy? Does that make sense for Nigeria right now?
Well, it's to an extent, even though because of the implication on the economy generally, but government borrowing from domestic market will have a crowding effect on the other sectors, the real sectors of the economy that are supposed to borrow to enjoy that growth. And when you look at why is government borrowing, you realize that the bulk of what government borrowing is actually used to finance recurrent expenditure, overheads and the like. But if government borrowing is actually targeted at capital expenditure, which will have a kind of multiplier effect on the economy, then we will say that, well, in the long run, it will be to the good of the economy. Right.
Okay, and let's look at the outlook for GDP growth in your view. 6.5% is where we are right now. Some people say we could do 7% for this year. Are you that optimistic?
Well, it depends on a number of factors. In the area of agriculture, we hope that there will not be any flooding this year, because flooding actually affected the level of output last year significantly. If there is no flooding, we expect products there should be a bumper harvest in the area of agriculture. And also for manufacturing, some sectors of the economy have been affected by CBN's initiative to lend it to them. If all these are able to bring out the output, and that will help the economy in a way. But in the area of oil and gas, there's likelihood that production may reduce.
So we could see a